So you learn some of those things as you move through those transactions as well that I just hadn't thought of. We think of commission-based roles in mortgage and hadn't necessarily thought about them in other spaces.
Yeah, I learned a lot going through that experience too. I mean, there's so many factors at play that you don't realize until you're knee deep in it.
Yeah.
There's a lot. So afterward, I discovered there's entire like Reddit communities that essentially lay it all out on the table. Like it'll be like former dealership guys, telling you everything that they're pressured to do and the things they try to avoid, and
I had not
giving
bothered
you the
looking
giving you
there.
the keys.
Yeah. Hey, everyone. Thanks for joining us. We're going to give it just a couple, 30 seconds or so, and then we will get going here this morning. We've been having a great conversation offline. And as we get started here, not on mortgage financing, but on cars instead. So we will get going here in just a second or so as we let a few more people hop in. Thanks for joining us today. If you have any great car experiences or bad car experience you want to share in the chat, humor us a little bit as we get going here. All right. Well, it looks like people hopping in here slowed down a little bit. So I think we'll get going. Good afternoon, everyone. This is Faith Howard Mooney. I am the VP of Member Engagement here at the Mortgage Collaborative. And so lucky today. I feel like I've met a new friend already, although I know that he's already friends with my whole entire team because I've heard such great things, but we haven't had an opportunity to meet in person yet. Kevin Strika, who is the VP of Operations. You're also the Encompass Administrator, I heard, at First Option Mortgage. Thank you for joining me today.
Yeah, thank you for having me.
Um, I would love it if you would just share to kind of level set with the audience a little bit about First Option Mortgage and what makes you different from other lenders.
Sure. So we are a Georgia-based IMB. We're licensed in 38 states with about 150 loan officers. And what I really like the most about First Option is that we have a great mix of just helpful people, a great culture, and a wide variety of products. So we can help almost any borrower, either directly or indirectly with their home financing needs. It's a very, very mission-driven organization and a delightful place to work.
Fantastic. Fantastic. I was sharing with Kevin earlier that in a former life of mine, I have been in the First Option office and know a number of the people that have been there for that same period of time and are still there. So that's always great when you can retain like that. That says something for your organization for sure, and had a very great experience in working with them in a different light as well. So think very highly of them as well. Let's get started today talking about it. I'm loving that I'm going to get the perspective of somebody who is in operations. That's where you lie and you deal with all of those things today on some of the things that I found in the news. And the first one really was that condominiums are gaining market share in the United States, which I would have to say for me wasn't really that surprising. Well, in some ways it was, and in some ways it wasn't. Housing supply is an issue. I'm sure you hear that all the time from the borrowers that you are working with. Um, you're in 38 states. I would imagine because you're in Georgia, you work in Florida. I would imagine that you run into condos all the time, and would just love to hear, how much have you seen more of that coming through your business, and share with me your insights on and why you think condo has become kind of, more in the mainstream now.
Sure. Yeah, so we actually do see quite a number of condos. We have a number of them in the Atlanta area. There's many, many high rises going up all over town. Some of our customers are buying in those locations. And of course, Florida is very, very famous for having a lot of condos. But, we see them throughout the country as well. When we have a Las Vegas branch, we have a number of condo transactions out there. Really, I've been a big fan of condos as that first step in the homeownership journey. They're generally smaller, of course, but they're also lower price point in general compared to, a single family house in the same area. So for somebody who is like a first time home buyer, they don't necessarily, have a whole family they're looking to put into a dwelling yet. It's a great way at a lower price point to get on that ladder and start enjoying some appreciation. That's what I like about it most.
Yeah. I think that it also is a great way to get somebody adjusted to owning a home without all of the maintenance of the home, right? And all the things that you need to buy when you have yard work and all of those things that you have to do yourself. The study that was done by Fannie Mae that I read. One of the things that was important to lender members is that condo project eligibility and some of those things were in the AUS systems so that underwriting was easier. They were looking for approval decisions or lists of approved condo projects to be out there. I haven't done a condo, transaction in a number of years. I was a processor way, way, way back when. But have those things, I know it used to be a pain point for lender members as far as in your process with all of the new products and everything out on the market and condos becoming more prevalent in your process. Has that process just become inherently easier, or is it still a pain point in organizations related to condo rules, condo eligibility, and those types of things?
In some ways, it's gotten easier. I think there is a better government database of approved projects, for example, but in some ways, it's also gotten harder. So you may remember a few years back, the condo collapse in Florida. That really brought to light a lot of the maintenance issues that are really buried within a
Mhm.
lot of condos. And some of that may be unique to that market, but not all of it is. Condos are run by essentially condo owner associations or homeowners associations. And, those entities, they are not always on top of the maintenance, which is why we have to do things like get the lender questionnaires and dig into budgets and all of these things that the government has us doing. So in some ways, it's gotten more complicated because issues like that, because of that tragedy, we're having to make sure that we're not lending on properties that could be subject to the same kind of physical issues. So
Right.
it's gotten a little bit easier with the technology, but due to some areas of neglect in those physical buildings, it's gotten more complicated too.
Yeah. One of the things that came out of the survey was HOA instability, deferred maintenance, which I'm sure is, a lot of the things that you would worry about from a risk perspective of things just because associations vote on what is going to get fixed and how it's going to get fixed and those types of things were some of the lender members top concerns that were shared. One of the other ones that was shared, and I would just love your feedback to see if you've seen this happen with your borrowers, is the rising cost or the inadequate homeowners insurance coverage. Rising costs because of some in coastal areas very specifically. Have you seen that be any type of an impact on your business? And how is, if you have, how is First Option helping prepare your borrowers for those types of situations in the lending process?
So normally, one of the other selling points of a condo is that you can get a different kind of insurance that's generally cheaper. But, as you have markets like Florida, where insurance in general is just very, very expensive, that benefit can kind of be negated. Now, you've also got the other end where insurance can affect a homeowner or a condo owner is, what are the rates that the condo association themselves have to pay? Right.
Right.
So as a unit owner, you're really just insuring, walls in your unit. But, you're not off the hook completely because you are a partial owner of that entire building. So part of what you pay in dues goes toward the master policy, and part of that master policy is things like the roof, the exterior walls, the other amenities. So I mean, in general, it's just gotten more and more expensive in those markets with, greater climate change risk and hurricane risk and things like that. Now there are some levers you can pull. They don't all work in all markets, but if you looked at, for example, the agency guidelines, you can see, what kind of flexibility do you have with deductibles. If you have a customer that, has got a decent savings buffer, they might be able to have a lower premium with a higher deductible, and treat it more in line with what I would call catastrophe insurance, and not necessarily something where you're going to go file a claim, with every burst pipe, or every minor issue. I mean, that's one of the things. If a monthly payment's the main concern, you can actually do. Like I said, it's not available in every market in every situation. I feel bad for those in Florida, and some of
Yeah.
the other markets like California, Louisiana, where it's almost impossible to find a policy, let alone a cheap policy.
That is correct. There's a lot. It seems like there's a lot of that going on with concerns about weather, and natural disasters and those types of things. Um, in my world, we have seen condos and townhomes here, in Minneapolis open up a lot more, because of the willingness of municipalities, to allow more of those types of properties in. Is that's something that you've seen? And obviously, Atlanta is a booming market. It always has been. It covers a wide, expansive area. Is that something that you've seen there as well as the willingness for differing types of housing versus just single family dwellings in communities?
Yeah, definitely. Not all communities love all housing types. If you have, some of the more accessible types that are very low price point would be like manufactured homes. Not every community is going to want that.
Right.
You'll have inroads somewhere, but not everywhere. Townhomes, I think, are a great way to, just like a condo, get into that homeowner ecosystem, start enjoying appreciation, as perhaps a first-time home buyer, or a move-up home buyer. But you don't necessarily have all of the same risks, or other issues that you might have with a condo. You don't have a unit that's 10 floors up. You've got one that's generally ground level, or at most, one level up. So I'm a big fan of townhomes too, because again, they're cheaper. They're more accessible. They can help somebody, get in that first rung of the ladder, so they're not trying to save up for a down payment to afford a house that just goes up in price every year. They actually own an asset that goes up in price, very similar to the market. So it becomes a lot easier to get that first townhome when you can, enjoy it for a few years, sell it at a profit, and then buy your single family, as your needs actually change. I think
Yeah.
it's interesting from the builder perspective too, because if you buy a tract of land, you can fit a lot more townhomes on that tract than you can, single family homes complete with a yard and everything. So yeah, it's really up to the buyers, what's important to them. Do you want to start that journey, or do you want to, get to, your dream home, that might be, a single family residence with a yard.
Yeah.
Sometimes you have to
It,
choose that intermediate step first, and then move up when you can.
well, I think especially now too, with the cost of housing everywhere gone up so dramatically, it's like, I think that a lot of people would agree that if you're looking to, housing still is the greatest way to build generational wealth, in the United States. There's nothing else that has filled that gap. And I don't know, I guess I think probably always will remain that way. Home ownership is a way, to do that. That sitting on the sidelines and waiting, hasn't necessarily been a good strategy, because the continued escalation of the price of housing, we haven't seen, at least here, we haven't seen, a dip down, and I don't think there's one that is, anticipated.
Yeah.
That kind of leads us into kind of one of the next things that wanted to talk a little bit about. There was a long article in the Wall Street Journal. I don't think it was last week. It might have been the week before. That well into adulthood, people are still getting money from their parents. And I know that, transactions, people give money to their children all the time. I have adult children. I don't have to do that though. I'm very lucky, but it does happen. I hear it in my friend base quite often. And people have done that when kids are buying a home. In this study, 59% of parents said they helped their young adult children financially in the past year. More adults under the age of 25, 57% live with parents right now. Um, it was 53% in 1993, not a 4% increase. Given what's going on, I don't think that's a significant amount of change. I'm kind of surprised at how high the number is or even was back in 1993. But I grew up in rural Iowa where it was like the minute that you turned 18, I think you were kind of like, you're an adult. There you go. We've given you everything that you know to do what you need to do as an adult. Work hard and it will happen. So I was kind of surprised at what that number is. Do you see a lot of, I would imagine the structure of deals that you do and everything, there's not vanilla out there as much anymore as what there used to be. Have you seen more financial input from or giving or gifts or things like that related to your purchases that you do?
Yeah, I see it in a couple of different areas. Number one is the gifts, right? So, gifts they've always been there. Anecdotally, it feels like they might be on the increase, but our demographics have shifted on the kind of customers that are coming in, and there's a big cultural difference between typical communities and those that have come from other countries, et cetera. I see a whole lot more gifts coming from brothers and cousins and aunts and uncles, as well as parents, and some of it is the same kind of cultures that are known for more like intergenerational households, et cetera. So I
Right.
mean, you've got that dynamic. Anecdotally, I feel like there's been an increase in co-signers and non-occupants as well. So, a parent will sign up to be on the loan, with their child, which I mean, there's pros and cons to that. Everything's gravy if the kid makes the payments, right? But if
Right.
that stops, then that can be pretty consequential for the parent as well. You might like no one expects their kid to quit paying the mortgage, but when it happens, can you actually afford it? If it's 5 years into the loan, 10 years into the loan, you really got to ask yourself that. But in general, I tend to be pretty optimistic on this topic. I think some people look at the way this is phrased in the media, saying it's financial dependence from adult children to their parents. I take a different view. I look at it as these are parents who through fortune, intelligence, discipline, whatever, they manage to have extra money that they're able and willing to share with their adult children. And rather than hang on to it, and have it be in an inheritance one day, they're while they're around, they're choosing what the investments are going to be. So they're choosing to give money to a child, to have a down payment for a house. To me, there's a lot of value in that. It's reflects positively on the moral judgments of those parents, because they're choosing to kind of help set their child up. They know what housing inflation looks like. They know it's not exactly as easy today as it might have been,
Right.
to purchase that first house. That's not beyond them. But to me, it's an overwhelmingly positive gesture that you're seeing at scale, at an increasing scale. Now, I mean, if it's money that's going toward, a new Xbox every year or something like that, the moral value is not exactly there. But I for one love to see a parent giving a child a gift for a down payment, because
Yeah.
like you said, you're really setting up that child for for success down the road, as long as they don't do anything
Yeah.
silly like take cash out, and spend it on things that are not not worthy.
Yeah, I love that view. And I have to say, I love that view, that very, very positive view that I think people are making decisions differently after, especially after COVID, right? Where everybody was kind of in their houses. And, it's been a while now since that's been over. But at the same time, I think it almost changed the view of a lot of people that I don't see as many like extremely large weddings. Instead, people are choosing to place their money other places. And I think some of that is as parents are choosing to share their wealth with their children, wanting them to be in a place of stability, a place where they can have that home, that comfort spot. And so I love I love your view on that. I think in the news sometimes it comes across more as these are people that can't take care of themselves.
Yeah.
And I don't know as I mean, I don't feel like that's true because I have a daughter that's in her early 30s and she's always taken care of herself. And so I don't have that view. Many of their friends are the same way. They have great jobs, they have great things, but they do have a problem right now finding housing.
Yeah.
That
I'm
is
going
for
to
sure.
ask you, like, if the gift wasn't there, would the child not be able to get a house at all? Or would it just be more difficult? I mean, for a lot of them, it's not a make or break. The gift doesn't make it possible. It just reduces a lot of the friction, right? I mean, what parent doesn't want that for their child?
Right. And then you get to see them in an environment where they can create their own space and enjoy themselves and hopefully spend time with them enjoying it as well.
Yeah,
Um, for some
gives
of
you a
it,
little
it
more
may be a
input.
way to give them a boost in the hopes that you have grandchildren sooner. It's like get them along
Very
that
possible.
path, quite possibly. Yeah. So in most of the places, I thought it was interesting. In most of the places where this survey was done, one of the things that came out of it that the parents that were surveyed, more than half of them said, having children at home or closer together improved their relationship. Like about 20% of them said it dented into their personal finances. So the overwhelming amount of it was something that was seen as a very positive thing from the parental side as well. So
You just
yeah,
have to
so
know what you can and can't do. Don't overextend yourself as a parent to support a child, but if you have the means, and the motivation, then it's a really, really good thing to do. It really helps them along. And keeping in mind there, you don't have to do a 20% down payment. So it's not like you're talking, $100,000, $200,000 gift. I mean, something that's the price of a used car, 10, 15, $20,000. I mean, that goes a long way if you're talking about a
oh yeah.
3% down payment, 5% down payment.
Well, and down payment is still the highest thing noted when people don't purchase. It's the biggest barrier, I guess I would say, that's noted still is the down payment. It's not necessarily even the qualifying features. It's having the cash for a down payment. A lot of that is misperception, and that people still think they need to have 20% down. So we need to work on that one as well out there. But I think that's gotten better given the environment that we're in.
Even some of my friends still tell me that. It's like, you guys know what I do for a living, right? Like,
Yeah, it's amazing when you get out like amongst your community and you're involved in conversations. For those of us that have been in mortgage for a long time, I think it's good to remember that we have a different view of it than what other people have had. And many of our friends and family members only have the view of what they've seen in the news,
yeah.
which can be really super in a 20-second news segment or 3 minutes news segment, whatever it is, it can be very not deceiving intentionally, but it can be not the best news shared, or you're going to get a different take out of it because it doesn't have all of the content that it should surrounding it.
That's one of the things I learned going into the mortgage industry is how complicated this business can be at so many levels, right? And it almost breaks my heart when I hear like a news article that just glosses over so much important context and detail and comes to some alarmist conclusion. You
Yeah.
know, when I'm in, you know, being in this business, I haven't met anybody who's trying to do the wrong thing, you know, but hearing the media coverage on certain topics, it's you'd never get that sense if you didn't have the inside view.
Yeah, it is interesting, and it is on all of us to share out with friends and family in those types of situations. You know, the reality, I think, of really what it is like. I always say that about the headlines. I think headlines. That's why I like to read news articles sometimes, is because the headlines are meant to grab your attention.
Yeah.
In many instances, though, it gives you a wrong impression if you don't dig further into what is being said. But I happen to like this particular one. It takes a village to buy a house. And so there is a new concept out there. I'm always looking for what's something new out there that's happening. And one of the things that's happening out in communities right now is co-housing, which I think is it. When I first saw it, I thought, okay, this is a bunch of people all living in one house, you know, buying it together. That is not what it is. But that's the impression that I got from the headline. But what it is, co-housing communities are intentional developments of houses that are all kind of clustered around a shared space. And so um, all houses have private living arrangements, but they may have more what we would consider, if you lived in a townhome or a condo, amenities, right? So they may have a shared space that's a cooking place or a pool or a all in like the center of this development. The concept originated way back in the 60s in Denmark, which I think is very interesting. It is not considered an affordable housing option, but is something that's kind of cropping up in other places. The particular place that this article was written about was in Houston, Texas, where they have found that in suburbia, um, along with the housing, you know, scarcity of housing and hard to buy a house, there's also they called it a housing epidemic and a loneliness epidemic in the suburbs. And you know, as a single person who's older, I can definitely relate to that if you don't have family around you, where that's part of the societal issue is involved in this concept of housing for sure. And it's kind of like more of, I don't know, a very collaborative, I'll use our word, a collaborative or cooperative thing that you're able to uh, gain sustainability elements and some of those other things by these houses coming together and having a different type of amenity than you can build in an individual home. Have you seen in any of your markets, have you seen this type of housing come up yet?
I've not seen it within the context of like us wanting to do a loan on one of these, but I've definitely seen them in the media. And I think it's an idea that's worth trying. You know, if that appeals to you know, to people that are looking to move from where they are currently, whether it's renting, whether it's, you know, downsizing, et cetera, I think it's a wonderful concept. It sounds amazing on paper. I mean, I'm just kind of envisioning, you know, the knock-on benefits that you would have from something like this. I mean, obviously there's tons of information about the loneliness epidemic and the effect on health, especially, you know, as you get older. I mean, you're not in school anymore. You know, you don't have a bunch of college classmates. Sometimes you don't even have, you know, your work colleagues. Like, what do you have left? It's your family. They might be spread out. You know, this is a whole nother group of people that you know, that you're co-located with, you know, and you can actually, you know, meet people and become friends and get interactions that way. To me, that's beautiful. You know, but think about also, you know, if you're by yourself, how much of a pain it is to cook for one, right?
Right.
So
Right.
a lot of
Exactly.
people, they don't want to cook for one. They're going to go to the Burger King, or whatever's close by. If you have a concept like this, I mean, the people that are living there, you've got an opportunity to improve things like nutrition,
Health. Yeah.
ability. You've got assistance when you need it. It's chock full of benefits, and I'm sure it has its challenges too. If you have common space, does it get respected? Does it get clean? Does it get this or that? I mean, it won't be without issue, but it can't hurt to try it. And it sounds like there's some builders out there that are constructing
Yeah.
these, and at the price points they're listing them. I mean, they're doing okay from a business model. You know,
Yeah, I will be. Yeah, they're listing them actually. This particular one, I think, was in the 550s. So it's not affordable housing by any
Not
means,
cheap.
but it not cheap. No, but one of the things that came out of this was just one of the things that you stated. There was a family that moved in that had smaller children. And they were in Houston by themselves. So they didn't have family around them, but they found like grandma like people and grandpa like people in their community that helped them, which is, I'm sure, why they called it takes a village. Because raising children are kind of, it takes a village with that as well. And they found some of those things. They are being built so that you can finance them individually. However, I would love it. I can't wait to watch this one kind of develop and see how people end up dealing with them. They're set up as a condo, so sold as a condo. Um, I would love to see or hear from people eventually on, because you have all of this shared space that's considered shared space and not the same necessarily. Is it treated as an amenity on an appraisal? Is it, how do you get the value out of what that space is that's not actually part of that condo dwelling? So I can't wait as people get into it to kind of see. I mean, I would expect, I don't know, your opinion, you're an ops person. Does it become an amenity? It's a condo, and then those shared spaces are amenities?
I think it's going to draw a lot of inspiration from the condo concept, with the shared spaces. What's interesting too, where you come up with comps, you know. Uh,
Right.
I mean, if you're trying to put together an appraisal, anything that sells in that complex, would obviously be on the short list. But when you're selling the first dozen units or 2 dozen or 3 dozen, yeah, you have to
Yeah.
come up with something.
Yeah. Are
That
you
could be
doing
fun.
a lot of this is a single family, but it's a comp because I don't have anything else. When it's the first ones are always the hardest because you don't have anything historically that has happened.
You probably have a
Um,
lot of condos on that list of comps. I,
yeah.
I would imagine
They're
that's
not like,
no.
yeah. Yeah. Interesting. Interesting. We are at the bottom of the hour.
Going
I
fast.
have, I know it always does. It always does. I have so enjoyed our conversation today. It has been fun. Like I said, I had heard lots of fantastic things from my team in other groups that you have been involved in. So thank you very much for your participation with us. It does not go unnoticed amongst the TMC family and the other lender members that you have interacted with. Everybody, come back and join us next week at the same time. We would, of course, love to see you and get any comments you have about what we've discussed. Kevin, this has been a great joy for me today. Thank you so much for sharing with us and sharing with the TMC family. We appreciate you.
Thank you so much for having me.